So I'm pretty sure this market crash has made some of you quite anxious. Okay, so it's like the market, has been quite fearful, and then the price has been keep on dropping. So some of you, I think the biggest question you all want to know is, has this market bottomed already, right? So how do we know? Okay, of course, the main question a lot of people love to ask is, is it the time to buy now? Is it the time to enter here, right? So I do hope in this video here, okay, I will give you a bit of some indicators, okay, and hopefully it will help you lah. Then one of my favorite indicator to take a look to know whether the market has bottomed is definitely market fear. Okay, this is my most favorite indicators. Now, why is because of this? It has been guiding me for throughout many years of investing. Okay, as the most famous one, okay, by Warren Buffett, be greedy when the market gets fearful. Okay, and why fearful? Okay, why this indicator here? And you can see, I think Peter Lynch is the one that summarizes it very perfectly. Okay, a stock market decline is as routine as a January blizzard in Colorado. Okay, if you are prepared, it can't hurt you. A decline is a great opportunity to pick up the bargains left behind by investors who are fleeing the storm in panic. Okay, so that's why fear is my most a favorite indicator. But then you may ask this question here, but this fear here could be a little bit of fear, okay, or how long is the fear? Okay, so because some investors, they are quite brave in the sense, okay, this a bit drop, they are not fearful and stuff. So when is it? Okay, how to look at it now? This is the next clue. You look at the level of market fear. Okay, so the level is the one that will help you at least take a look whether the market has already bottomed or not. Okay, now, so why do we care about level of market fear? Now, first thing is market panic. Okay, market panic, we all know that it's an opportunity for long-term investors. Yeah, we know that this is so, but how do we execute it? Okay, how do we look at it, right? So our goal is to roughly identify high fear moments. This is the key here, okay? Because you can see when there are high fear moments in the stock market, right, it could indicate potential market bottom. And why do I say that? Because peak fear, also means most of the average and weak investors are being washed out already. Because the market has been fearful, price will keep on dropping, right? That means they are so fear, they are very weak investors, okay? And they will keep on selling. And the price is dropping because they are people selling it, right? So logically speaking, when there are lesser people selling already, it also means potentially less chance to drop further already. So that's where next level investors like us would start to take advantage, right? So that's how you can be greedy when be greedy when the market is fearful. Okay, so the tools that I use to discover this level of fear, there are two tools. Okay, one is called the VIX, or we call VIX. Okay, it's called the volatility index, and another one is fear and greed index. Okay, and we will go through it one by one. Now, so what is this VIX here? Now, VIX is what I can say is the fear gauge of the market. All right, for your understanding, VIX measures the S&P 500, all right, and the expected volatility, okay, for the next 30 days. So when investors expect big moves up or down, the VIX will go up. So for us, to know how to use it is for us to understand if the VIX number is high, that means there's a lot of high uncertainty, and a lot of market is very fearful. The higher the number, the more fearful it is. If there's a low VIX, the low number, that means that the market is quite confident, and then the market is quite stable. Okay, that means whether go up or down is quite stable. All right. Okay, so this is how it looks like. Okay, this VIX index. Now, how do you go and find this? You can just go to Yahoo Finance, or just Google it VIX. Okay, and then it will come out this chart. So this is how it looks like. Yeah. Okay. So what I want to tell you here is when you look at VIX and the market, there is an inverse relation between these two index here. Okay, let me show you right now. Okay, so first thing you can see, there's a correlation here. So as I can say, I told you just now, when the VIX number goes up, right, that means that there is a lot of volatility, and generally that's when market is quite fearful. And then, because fear is the one that makes people, take action, or say be more emotional. All right. So that's why when the price goes, the index goes up, right, generally you can see the price here, are the ones that drop. Okay, so for example, if you still remember 2008, the price, of course, is a small drop, because the market is so long ago, right, this index here, right? So it makes it very small. So we can see there's a drop here, right? But you can see the great financial crisis of 2008, you can see the VIX here went up so high, it's around 80 times. Okay, then if you ask, I think more nearer one is the COVID 2020. You can still remember the COVID 2020 when the price dropped, right? Okay, spikes up, a lot above 60 to up to 80 here. Then the inflation market crash of 2022. That's when the 1.5 year to 2 years market drop right here. You can see it's quite elevated. All right. And then most recent, the tariff 2025, this one. You can see the VIX volatility go up to almost 60 here already. All right. So how to read this VIX? How to read it? Now, there are a lot of numbers. Okay, like I showed you above, I said there's 15 to 20, right? Okay, so how to read it? Like you can see that at the side here. Okay, about 20, 40, 60, 80, right? So how do we read it? Okay, now this is, a general guide for you guys. So the VIX level of around 15 is quite normal, around 15. So it's market sentiment is around calm, very complacent. So it's okay, nothing much happened, right? The ones that we want to take note, all right, for me personally at least, is when the VIX level go above 30. Okay, because above 30 is generally a sign of extreme fear already. Okay, for me when I see it, all right, and it's possibly is near bottom already. Okay, so why do I say that? Okay, so you can see why 30. Okay, so Daniel, why not go up to 50? Why not go up to 60? All right, because if you see throughout the years here, okay, I can take the year from 1995. You can see if you take around 40 or even 50, 60, right? It's like throughout these years, they are only like what? Okay, let's say you take 40, they are only like 1, 2, 3, 4 times. 4 times in around 30 years, 30 to 35 years, they are only hit 4 times already. All right. So if you put your VIX number too high, you may miss the boat in a sense, right? Of course, if you put 50, it's only 2 times, right? So that's why the sweet spot in a sense, okay, that you can take a look that hits most of the time when there's a market drop is around 30. It's around 30, you can see here. 30 is the one that hits the most. All right. So that's why I personally feel, okay, VIX, if the number is above 30, that's when you can start to take note already on the market. All right. It's because it signifies high fear and panic, and it could be a potential entry. Okay. Now, so the next indicator is this fear and greed index, which I think no need much introduction. Yeah, a lot of you knew this already. It's created by CNN to measure market emotion. But do take note, all right, this fear and greed index is quite short term. Okay, because you can see, market can also be fearful during a bull market. All right, because sometimes things can happen, okay, and during a bull market, and then the price drop, and then fear and greed index will immediately move. All right, so you just need to be careful when using this, all right, because it uses short-term indicators to measure. All right, so how to read it? Well, I think it's self-explanatory lah. Yeah, they already put the word here already. Okay, so the one that if let's say you want to take the chance, okay, to enter, to decide, mostly it's around 20 to 25. Here 20 to 25, extreme fear. Okay, or even fear is also okay. Yeah. Now, so the key is how do you use both of these together? Okay, to roughly know when the market is bottom already, if you guys are searching for this kind of answer. Okay, so the strategy is to combine the fundamentals and the market fear signals. So do take note, okay, you use these tools here to roughly know what? The level of the market fear. Okay, of course, as you all know, the higher the level of market fear, that means the better it is. Okay, because a lot of people are selling already. Okay, then when they hit peak fear, that means you already wash out all the big investors already, right? Then it also indicates to you how much cash you need to deploy. Because sometimes the market starts to decline, you do not know whether I should deploy more or should I deploy less, right? So when you see the VIX number and then the fear and greed index is the VIX number is very high, then the fear and greed index very low, then roughly it gives you some form of guidance and confidence that I can deploy a lot more cash already. Okay, but then again, okay, there is a disclaimer, of course. Okay, please don't try to time the market and don't try to get the most bottom. All right, like I said, these are tools just to give you as a guide. All right, it's not a foolproof plan. Okay, to let you know this is the most bottom already. Okay, no. So you should look for what? Generally, only two rules. Okay, the VIX number more than 30, fear and greed less than 25. You double confirm both of it. Okay, so like I shared with you just now. Okay, like now, okay, as of today, you can see April 15. Okay, so you can see right now, okay, this VIX index currently is at 30. And if you have been investing, have been following the market for the past 1 month, you can see it's quite volatile, really. And that's why the market drops, okay, because the peak, okay, from around 20, 15, around stable, but then spike up to 50, okay, and then, but it went down, okay, but then it's still above 30 here, okay, and then the fear and greed index, okay, now it's around 20. If you check 1 week or 2 weeks ago, I think the most I saw, the lowest is 4. Yeah, so at least it now at least tells me that, hey, the market is near the peak fear already. Okay, near the peak fear, and then it's also quite around the near bottom already. All right. So the next thing is important, okay, for you guys to know. All right. So use this VIX, okay, and the fear and greed index as a guide. Okay, because these both index, please take note, it may stay elevated for some time. It's not that it spiked already. That means that is the bottom. Okay, and then you enter, and then there's the bottom rate. No, it's not that, because it may stay elevated. It may continue to stay at that range, okay, because the index measures the market, not individual stocks. Okay, like I want to show you the elevated one. Let's say, for example, the global financial crisis here. Yeah, it spiked up here, but it may stay elevated. above the 31. Okay, because why? That's when the market slowly continue to drop. The next one, that more fresh in our minds, the inflation 2022. Market has been dropping for 1 year to 1.5 years. And you can see this VIX here around elevated around 31. Okay, so how do we, how to say, double confirm it? Okay, double confirm or so-called increase our chances, okay, of success here. Now, it's not foolproof, okay, but at least I feel this guide here, right, will give you a second level of confirmation for higher margin of safety. Okay, so the first thing is, okay, you take a look at the fixed one, okay, and then you take a fear and greed index, take a look at it. It's more than 30, less than 25. Okay, I know the market is around the peak fear already, all right? But then again, double confirm with it. Make sure you only focus on the good fundamental companies and focus on the undervalued stocks. Okay, this is very, very important because stocks move independently from the index. Some, for example, the market could be peak fear already, but that stock price maybe didn't drop. It's just the things happen in the stock market, right? And it could be undervalued. But you thought that, oh, this is market fear already. Okay, then I go and enter to a very overvalued stock. Okay, don't do that. So you want to make sure there's a higher margin of safety. Make sure at least you make the right decision. Double confirm with it. Look at the VIX, fear and greed index. Okay, good. Peak fear, roughly peak fear already. Then I look at my individual stock right now. Double confirm good. Then see at the valuation. Okay, because this stock here, okay, it drops in accordance following the market, and this right now is undervalued. So it's roughly give me some form of confidence already, okay, for me to slowly enter, okay, or even take a position in a certain stock. Okay, so again, don't wait for the perfect bottom. Low enough is good enough. All right, and of course, be prepared to withstand more drops lah. Okay, so continue to stay vested and be patient with it, and just wait for everything to blow over. Yeah, so it's very important. I want to repeat again. This is not, okay, a real indicator, okay, that to time the market bottom. Is not. At least it gives you a range. At least it gives you some form of a guide. All right, and always, okay, be prepared to withstand more drops, potentially more drops, because we cannot time the bottom. But at least we get it low enough. Okay, low enough is good enough. Okay, so do continue to subscribe to my YouTube channel, because on my next video, okay, I'll give my view, okay, on how long will this market crash last. Okay, and based on my research, okay, I think there will be quite a positive answer. Okay, if you want to know what it is, okay, then okay, do continue to subscribe, because I'll be posting this very, very soon. Yeah, so again, guys, okay, if you want further guidance, okay, like stock articles or stock analysis, all right, okay, do consider, okay, to subscribe to our newsletter or even join our Telegram community. Okay, you will get a lot of more engagement, okay, and more stock information from us. Okay, so see you in my next video. Okay, guys, and thanks for watching.